Hi, I'd like to introduce Chris McAlpine, who is the co-founder of Context Capital, who we at Securitas have engaged as our asset consultants. Most recently, Chris was the Senior Investment Analyst at WA Super. In this video, Chris will be giving us an investment performance update of the Securitas 98 SMA model.
Securitas' 98 model, which is the highest risk and highest potential reward portfolio, fell by 4.4% in the first quarter of 2022. The 98 model has a very high percentage of its investments in global share markets, which means that this result, although disappointing, is certainly not surprising. Over the first quarter of the year, share markets were primarily driven by fear, as inflation is rising and central banks had to raise rates in an attempt to fight it. Owing to its very high exposure to share markets, as broader markets have fallen, the 98 portfolio has fallen with them. On a positive note though, the 98 portfolio did outperform pure measures of global shares. Owing to investments in other asset classes, such as alternatives, property, and infrastructure, losses were limited relative to global share markets. And in particular, some US markets were down by almost 10% on the quarter. On a more positive note, owing to diversifying and alternative investments within the 98 portfolio, performance was better than overall global share markets. The alternative component of the portfolio actually had a positive performance over the quarter, a very strong relative result, while investments in property and infrastructure did not fall by nearly as much as overall global share markets. Securitas' 98 portfolio, which is the highest risk and highest potential reward portfolio, fell by 4.4% over the quarter. Negative performance was almost entirely driven by the fund's high exposure to share markets. As inflation spiked and central banks were forced to raise interest rates to combat inflation, the effect on stock markets was to force a pretty significant sell-off over the quarter. Securitas' 98 portfolio fell by 4.4% over the quarter. While this is a disappointing result, the 98 model has a very high exposure to equities and is therefore the highest risk and highest potential reward portfolio that Securitas offers. Negative performance for the quarter was primarily driven by exposure to equity markets, which experienced significant sell-offs over the first quarter of the year, owing to rising inflation and interest rates. While the negative result is disappointing, there were elements of the portfolio that helped to offset losses from global share markets and led to a total portfolio performance that was better than global share markets. The portfolio's investments in Australian shares significantly outperformed global markets, which helped to offset losses from global shares. Diversifying and alternative investments within the portfolio also helped to cushion the blow against global shares. Alternative investments had a positive return for the quarter, while investments in property and infrastructure fell by significantly less than global share markets.